Robert Sockin is with us now. He's global economist at Citi. Robert, good to have you with us here. Good morning. Prashant this side. So, should one start to rethink once again, despite what Fed Chair Powell said after the FOMC, what he said towards the end of last week, sounding very dovish. But will all of that, in the light of data, will have to be reconsidered? Because the market will look at data, I guess, right? Of course, I mean, in conjunction with what they're hearing from Fed officials. What's your sense?
Yeah, thank you so much for having me. It's great to be here. And absolutely, I think what we're seeing is a U.S. economy that continues to be resilient, but at the same time facing inflation pressures that have been surprising to the upside throughout Q1 and well above target. So, right now we're still looking for the Fed to start easing rates in June. I think this is a Fed that really wants to start cutting rates, at least getting the initial cut out of the way. And it's a Fed that's set a relatively low bar for starting that. I would say if inflation is coming in somewhere 3% or under, it's probably enough for Chair Powell to start easing. But I think, again, getting back to the data, what it's really highlighting is that if the economy ends up being resilient and inflation ends up being sticky, that glide path down for the policy rate is likely to be very gradual. So even if they start cutting in June, it might be a very slow path down, especially if we're seeing the economy hold up well and inflation only come down slowly.
How are you feeling about a market like an economy like India? Because we're also preparing for the start of the rate cutting cycle, maybe somewhere in the middle of the year. What are you factoring in, and what's the best way to look at it now from a global lens?
Yeah, and this is a great question. And I think something we've been highlighting in our global outlook is this is a world where the data in Q1 have been surprising us to the upside broadly across the world. But really, we're seeing an exceptional amount of strength in emerging markets. We've seen East Asian economies like Taiwan, Vietnam, those forecasts have been gliding up over the last few months in our outlook. And India has been another strong performer as well. You saw very strong growth at the end of last year. And we're looking for growth for this calendar year around 6.5%, somewhere in the mid 6% range. So another strong year for growth. And I think what's happening is India has a lot of good internal dynamics, but the string that ties these economies together is a lot of them are benefiting from movement away by producers from China and into other locales. So economies like Mexico, Vietnam, India, I think are all benefiting and likely to continue to benefit from this tailwind. So we're very constructive on India and emerging markets more broadly. And I think also if we are seeing global manufacturing improve on a durable basis, and if global trade starts to improve, I think that'd be another very positive aspect for the Indian outlook.
All right. Hi, Robert. Good morning and good to see you. Nigel on this side. When we last spoke, you were leaning towards, I think, 4 to 5 rate cuts from June onwards of 25 basis points odd. Or what are you leaning towards now? That's point number one. And point number two is, China was underperforming and India became the only one rather than China plus one. But there are some data points that suggest that maybe the economy is turning around a little bit on China. How would you be positioned on that market?
Yeah, great questions. On the first one, we've been expecting 25 basis point cuts from the Fed for a while, starting in June, as I mentioned. That is predicated on the economy slowing down meaningfully in the middle of this year. If the economy slows down meaningfully, it gives the Fed reason to keep cutting. So that's where our base case of 5 cuts comes in this year. As mentioned, if the economy ends up being resilient and inflation comes down slowly, I think you're likely to only get 3 or maybe even 2 cuts from the Fed this year, depending how the data comes in. So base case of 5 based on a slowdown, material slowdown, but you could get a fair amount less than that. On China, I think it's very striking. You're seeing data come in better than expected. We just saw that over the weekend with the PMIs. You're still seeing the property sector be quite weak, but other parts of the economy are holding up relatively well. So we recently marked up growth for China for this year from 4.6 to 5%. so at the government's growth target. I still think those factors that I mentioned of companies looking to shift away, or China plus one, China plus many strategies, are also happening in the background. But there's enough momentum within the Chinese economy to get that growth target this year. So I'm more concerned about China over the medium term. But I think for this year, growth is likely to come in solid, somewhere around the government's growth target. And certainly, as you mentioned, recent data have been fairly encouraging on that point.
Robert, just on the back of China and the numbers which we got yesterday, commodities rallied big time here. The metals index here in India was up some 3.5–4%. Is that justified? Are we likely to see more of that? If Chinese growth surprises on the upside, will that support commodity prices overall?
Yeah, I think it's likely if Chinese growth holds up fairly well, that should be a support for commodity prices. It depends also not just on China, but broader manufacturing activity, as I mentioned. How well does that recover? Are we going to see a durable recovery in that this year? And then more broadly, how well does the global economy hold up? We've been looking for oil prices to fall a fair amount coming quarters. Recently, they've been performing much better. If we are correct that the global economy is likely to slow going into this year or later into this year, then I think that's going to weigh on oil demand and other commodities. So China is very important, but I think the broader global picture is also very important here as well. But as you noted, you're seeing in markets a lot of these measures for commodities starting to improve. And I think if the data keeps surprising to the upside, you could see some of that continue.
All right. And the data in India is also surprising on the upside. We've had some really strong GST collections in the month of March. So that's something that the street will take positively. Thanks a lot, Robert, for joining in and giving us your thoughts. Let's take a quick break. On the other side of the break, our list of top 10 stocks is lined up with our entire research team. Don't go anywhere.